FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz, and it's November 14th, 2017. Well, as you know, you are starved for yield. If you're looking for a return on your investments and you don't want to be in the stock market, you want real estate, well, there's a lot of alternatives that have popped up in the space lately in the market. And hey, don't forget, get involved in the show. Send me an email. I answer all. The only ones I haven't answered right now are the ones that required complicated answers where I actually have to do some research, which is not what I signed up for here. But the email address is kl@kerrylutz.com. And don't forget the Twitter feed @KerryLutz. So looking at how do you get a higher yield? How do you do it in a safe manner rather than a reckless manner? And Craig Cecilio is with me now. He's with an organization called the DiversyFund. And Craig, welcome to the show.
Thanks, Kerry. Thanks for having me today.
Hey, so Diversey, is that like Diversey Street in Chicago? Is that the name, or we just come up with that?
We hired a branding company a few years ago to come up with it. They had a couple options for us. And at that point in time, I was thinking that's kind of catchy. It's like a little misspelling of diversity, so I liked it, and thought down the road about diversification, it kind of made sense if we were going to diversify our products down the road, and so we went with that. That was the best one of the options they had for us.
That's pretty cool. Well, I looked at your website, and you can find Craig's company at DiversyFund.com. That's DIVERSY fund.com. And I got to tell you, I'm really intrigued about it, and you're not even paying me to say that. It seems like you give entree to deals that Joe Sixpack and Jane Leader, I guess, wouldn't otherwise have the ability to get into.
Exactly. It allows opportunity for everyone across the United States to invest into these investment vehicles. And the barrier to entry is really tough. It's really high. Most people don't have that opportunity because they don't have the cash to put $100,000, $1 million, $5 million, $10 million into these projects. So the whole financial world just kind of works with each other, works with hedge funds. I call it the super wealthy when you have $5 million plus. And they have the opportunity to make these fantastic returns, and they kind of have a monopoly on that market. And so by crowdfunding and through the Jobs Act, now we're able to offer this to just anybody across the U.S. And through technology, it doesn't have to be region-specific or state-specific. It'd be anyone from anywhere into any project in any part of the country as well. So, for instance, you could be living in Florida, invest in California. You could live in California, invest in Florida, in Iowa, Tennessee. It could be wherever you want. And you could pick and choose what you want to do. And now, through technology as well, you can do your due diligence through our platform and have that material in real time to make those decisions.
And that's a good thing. It's really opening up the whole space to these investors that wouldn't otherwise be able to do it. What's a project? What type of criteria does a project have to meet for your fund to get involved in it?
That's a great question. Since I've been in the business for almost 20 years, and I hate saying 20 years, for a long time, I've seen a lot. I've developed the right relationships. So we kind of have the inside track on the better deals. We don't necessarily have to look at the 1,000 deals to pick that one deal. We have the relationships in place where we're getting stuff first. We have a reputation of closing deals. So in the broker community, when they present us something, they know we can close. So we have a pretty good pipeline of transactions. Now, what we really do like is a lot of cash flow properties. We like mixed use development in urban areas. And we also like homes that are designed by specific architects that are going to add value to neighborhoods, such as we have some opportunities through Monterey, California, down in Hollywood Hills and Beverly Hills, and down here in San Diego, where we're actually adding value to neighborhoods, taking abandoned projects and adding a little bit, like I like to say, is a little flavor to that, and introduce a new design concept that otherwise hasn't been done before. And we're entering that project at the right price point too, as well.
So you obviously they have to meet certain financial criteria. How can they afford? So, as far as return goes, on your site you say 9 to 18% return. How are these shorter funding deals? Shorter time to maturity?
Typically 1 to 2 years, depending on the transaction. 1 to 2 years. On some projects. On the commercial projects, you could stay a little bit longer, 3 to 5 years. Typically, the higher returns are more on the single family, and the middle of the returns would be more on the mixed-use commercial projects, and the lower return would be a diversified product that we have, as we have a fund that's collateralized by multiple assets.
So what type of you're fairly new, at least in this aspect, this platform of funding projects, as my friends in Canada like to say, projects. What's been the default rate so far?
For us, none. No default rate on this.
So as you grow, are you going to be able to maintain that record?
Yeah, since we're a vertically integrated platform, that means that we have ownership of the projects. So we have ownership, so we can't really default on that because we have the money comes to the specific project, and we have full transparency of that project. We have full control over the construction. We have full control of the finances go along the project. We got full control of the how to say it, reposition of that asset, if whether we're going to hang on to that asset as a multi-unit and do that for cash flow purposes, or we're going to sell that. We have full control over that process. So that allows us to give the investor better information, faster information, more transparent information. And with that model, it really gives our investors more security, whereas when you're lending money to another party, that's more of a lender, that's more of being an online lender, and there is a assortment of issues that comes with that, and one is the transparency. It's tough to have full transparency there. When a problem does arise, it usually arrives later in time, some months down the road, so you can't really be that adaptable to tackle that issue. And let's be honest about this. We're in real estate. There's always some issues and problems that arise in any type of real estate transaction. So I just really think the risk is a lot higher when you're lending money to people who otherwise might not be able to get that money through a bank, through an institution. That's already a high risk investment versus where we're institutional quality grade investment opportunities, and we have full control.
I see. So totally different way. You're not going in there basically loaning money. And so it's an equity fund then effectively.
Correct.
All right. And so right now you're in California, but obviously business is so good you're looking to branch out at some point?
We can. We do have a plan in place to do that. Right now our pipeline in California is up to $500 million. We most likely can increase that to $1 billion. We would have to see at the end of probably next year of where we're at and see what markets we want to get in. We just be employing the same techniques we've used to get into those markets. We've had some opportunities, but right now our infrastructure is in place for California. We still have deal flow, so we don't see going outside that bucket right now. But we can go outside that if we had to.
Understood. So what project have you done that you feel the most proud of?
There's a couple of them. I mean, we have one that's about 98% finished in La Jolla. That's a phenomenal project. We have one in a high density, affordable area in San Diego that we're going to break ground in construction in about 4 months. I'm really excited about that. That's about 58 units, mixed use commercial in a really cool part of town. The area is called Hillcrest. It's in San Diego. I'm excited about that project. I'm excited about another project we have coming up in Hollywood Hills. We just got the construction permit on that one. Should be breaking ground in a few months on that one. So those three I'm really excited about. So we have one as you can see, I just said probably 3 different phases of the projects, not on purpose, but one that's going to be for sale. It's finished pretty soon. One that we have the construction permit on and we're going to start construction, and one that we're in the process of getting the construction permit on. So I'm really pumped about all 3 projects.
All right. So obviously you're not just doing these projects to get the highest possible return. You really are looking for something else, making a contribution. Not that you're trying to save the world, mind you, but you'd rather improve what's there than just exploit it.
We've been fortunate with that process. It's kind of happened organically. We've seen that we've been given that opportunity, and we just kind of ran with it. And when you get that opportunity to do something where you could actually make a little bit of money and actually have a little bit of a social impact, I think that's something that you need to seize right away.
Right.
And and with that being said, I'm pretty pumped about everything.
Oh, it's great. Sounds like you're really onto something here, democratizing, if you will, the whole process so that people who could otherwise not be involved in such a project can now get involved in it. People want to find out more, Craig, about what you're doing and find out more about you. Where's the best place to go?
You go to DiversyFund.com. You could also follow me on Twitter and on Instagram. There's put a lot of photos on Instagram nowadays. There should be only one Craig Cecilio out there, so I should be pretty easy to find.
I found you.
I'd like to say I'm very interested in getting more people to participate in this, because I still think the evolution of crowdfunding, we're just at the infancy stage. And if we could really get people to participate and we have positive experiences, so there's 2 things, participation and positive experiences, which is a lot to ask. We're going to see some things change throughout the entire real estate landscape throughout the whole country. We might be able to finance infrastructure projects that otherwise the government can do. We could do this through the private sector. If people start contributing and they're not looking for, you start bringing developers aboard and investors aboard, or are driven by social impactful things where they're not driven by making the highest return possible, but just more contributing to society.
Right.
That's what I think the next stage is going to be with this. And I'd love to see that happen, market permitting, and see where it takes off. But I'm really excited to see where this goes at the end of the day.
Yeah, you should be, because it really is alternative finance at its best. No big institutions involved, no bankers with their dull suits and their dull opinions. And, there's a lack of creativity, and there's a lack of just motivation in the traditional financial sector to take on these projects and to really, really search for excellence. They'd rather you cut back on some of the amenities in a project so that the cash flow will be higher, and even though it'll diminish the project, and when you're running your own ship here, you can do it the way it should be done, and that really is a great thing. Hey, as I said before, get involved in the show. Send us an email, kl@kerrylutz.com. Twitter feed's @KerryLutz. The Facebook page is Financial Survival Network. Craig, been a pleasure. Wish you the best of luck, and we'll talk to you again soon about this, because I'm anxious to see the next step when, we talked about it before, we won't talk about it now, but when you really turn on the accelerant for growth.
Yeah, sounds great. Thanks, Kerry. Appreciate it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.